Terra fallout, Stablegains lawsuit, Hash loses billions, Finder wrong and more. Fallout from the collapse of the Terra ecosystem continues to unfold, with the United States-based yield generation app Stablegains facing potential legal action over its losses from the event. Users believe Stablegain has allegedly lost up to $44 million worth of deposited funds based on a post on a Terra forum by co-founder Kamil Ryszkowski asking for relief funding. He disclosed that a day before Terra UST had lost its peg with the US dollar, its users' funds totaled over $47.6 million UST from 4,878 depositors. Currently the price of UST is trading at $0.075 according to data from CoinGecko. A letter from class action law firm Erickson Kramer Osborne, EKO, sent to Stablegains dated May 14 demands a record of customer accounts, marketing materials and any communications regarding UST. These guys are in deep trouble. They lost about $42 million in funds from 4,878 customers and probably have no way to pay it back. They and number 39, a small startup, because they went all in on Anchor and number 39's invincibility. Conviction bets are great, but not when toying with people and number 39's savings. 2 halves, pic.twitter.com/p9s5ufilef. Fatman, at FatmanTerra, May 19, 2022. You owe an uncompromising duty to preserve any evidence you know or reasonably should know will be relevant evidence in a pending lawsuit, the letter said, adding failure to comply may result in civil or criminal penalties. Echo verified the letter's authenticity to Cointelegraph and said it had opened an investigation into the Terra ecosystem collapse for possible class action. Stablegains users were able to earn up to 15% annual percentage yield, APY, on deposited US dollars, which the company apparently swapped to UST to earn yield on the Anchor protocol. Documentation from Stablegains' website updated 7 days ago claims that USDC and UST are the main stablecoins used. The site still maintains that Anchor is our current go-to protocol, and the basis for the Stablegains stable 15% plus APY rate. According to cached results of the webpage, Stablegains said it allocates funds across a number of stablecoins to not be fully exposed to the potential instability of one stablecoin. However, users allege the company has since amended the wording on how it mitigates risks. Stablegains has started allowing withdrawals, but USDC will only be provided at the market value of UST. Part of the terms and conditions noticed by a user stipulates the company isn't liable for losses due to the exchange rate. Hash takes a big hit. South Korean-based venture fund Hash has taken an estimated $2.9 billion loss on its Terra (LUNA) holdings according to on-chain data. The crypto wallet linked to Hash shows the firm still holds nearly 25 million Luna, which could have netted the firm almost $3 billion if sold at the coin's all-time high of $118 in early April. Reportedly, Hash has said that it is financially sound and has not been affected by the Luna price collapse. Finder survey 92% wrong. In late March, comparison website Finder conducted a survey of 36 fintech specialists who provided some bullish predictions on the price of Luna. The survey concluded that the pundits thought Luna would be worth $143 by the end of 2022 before rising to $390 by 2025. Dr. Dimitrios Salampasis, a financial lecturer at Swinburne University of Technology in Victoria, Australia, was one of only 8.3% of the experts, doubting Terra, and was quoted saying algorithmic stablecoins are inherently fragile and are not stable at all, and added Luna will be existing in a state of perpetual vulnerability. Well played, Dr. Salampasis. No plans for LFG's AVAX reserves. The Luna Foundation Guard, LFG, which supports/fails to support the Terra network, has disclosed no plans to use the Avalanche AVAX reserves it holds, according to a tweet from the Avalanche blockchain team. The LFG and Terraform Labs, DFL, purchased around $200 million worth of AVAX in April to back its USD stablecoin. The price of AVAX dropped 30% earlier in May on fears the LFG would sell its AVAX to save the USD peg. However, Avalanche says the TFL portion of over 1 million AVAX has a lockup period of 1 year. Some members of the Avalanche community have inquired about details around the $AVAX reserves that the Luna Foundation Guard and Terraform Labs hold. DL, Dr. The AVAX is currently immobilized. Below is a transparency report. Avalanche, at Avalanche AVAX, May 19, 2022. LFG's treasury currently holds $61 million worth of AVAX and is the second largest holding behind USD and its $225 million reserves. Avalanche says the proposed Terra chain fork is why the foundation isn't planning to sell. Delphi, you were right and we were wrong. Crypto-focused research and investment group Delphi Digital published a post-mortem on May 18 regarding its losses due to the collapse, saying it always knew something like this was possible. We miscalculated the risk of a death spiral event coming to fruition. We've taken some heat for this over the last week, and we deserve it. The criticism is fair and we accept it. The firm didn't disclose the dollar amount of its losses but said it purchased a small amount of Luna worth around 0.5% of its net asset value, NAV, in the first quarter of 2021, which grew to around 13% of NAV as the price gained and the firm made more investments. It added less than 5% of its Delphi Ventures deals were in companies or protocols related to the Terra ecosystem, including a February 2022 $10 million investment into the LFG, with the firm writing a $10 million investment which, based on the current Luna price, is entirely lost. Delphi Ventures did not sell any Luna during this event. The news on Terra isn't all bad. Pantera Capital, an early investor in Terra, revealed that it had cashed out around 80% of its Luna investment, with the firm turning $1.7 million into around $170 million, according to partner Paul Verdicat.